Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Monday, the 27th day of April, 2015, and this is the daily report for gold and silver. Wow, we have had alternating candle colors, meaning higher close to lower close on a daily basis for as far back as really almost the beginning of the month. Now, we're up substantially, huge move in gold as it trades up about $20, $20 to $22 higher on the day, 1202.38. That's a current print, low 1179.50 and the high 1206.80. Traders, even more dramatic of a rise, up about 4%. Yes, 4% on the day, 63 cents to the plus side is silver. Currently trading 1637, low 1577, high 1647. And you can see when we look at this is simply a simple moving average 14-day on our daily chart, and that comes in at 1619. We're well above that moving average at this point. And as I said, across the board in the precious metals, sharply higher pricing on the day. So traders, I'll be honest with you. It would be nice to tell you that I had a better read on the market than I do. It's very, very difficult to have any kind of a real concrete read as to overall market direction when A, it maintains, or I should say gold prices maintain themselves in this tightly trapped range between a 61% retracement now, because we did get a lower low on Friday, and the high that we have seen recently at 18 and 23. The market has stayed spellbound, but spellbound within that range. Now, there's no doubt this is a tremendous move to the upside after finding some real support at a 61% retracement. And the real question is, will we see any kind of real follow-through on the upcoming days this week, this being only Monday? Because what we can see is that each up day has been followed by a lower closing day, a red candle. You get these alternating candle colors. Now, the one thing that we do see is that in terms of today, we have had an absolute increase in range. Look at the range between the open and close throughout the week before last and into the first part of last week. Of course, this being Friday and this being Thursday, when it broke below the bodies. That's really what I'm looking at, is that open to closing range. Very, very tight. It breaks below. At that point that it breaks below, it does find support at a 50% level. And I shouldn't say support as much as the low managed to the market managed to trade to the low and then bounce off of that low. However, the following day it came down and made a new low and actually tested the 61% retracement. So we are really in no man's land in terms of we're not near a high, we're not near a low right now at 1202. But the key is right now, the 1200 is a pretty substantial number. And when we look at it, let me try to get this line in as straight as possible. But when we look at it in this way, what you do see is on each occasion last week that we attempted to take out this particular high above 1200, it would be unsuccessful and drifted lower and lower. So right now we are on the sidelines. I cannot make a recommendation on a specific trade until I have some sort of defined direction. What we have noted is that we are in this tight range with lows at 1173 and highs above 1220. So traders, we're looking at a daily chart, and this chart, of course, is in Japanese average format. You can see that we don't really glean a ton of information from this chart either. Today's substantial move, following the kinds of moves we saw last week, of course, really puts it as a small green candle. And you can see when we remove the Japanese average as a study, we will now see the tremendous move to the upside that we have witnessed today. Now, in terms of the actual range, the only thing that we've seen, and you can see on this one, I've got a 50% retracement in there. Let me go ahead and pull that up. But once we had our 61% retracement, you can see where that new low came in at. Right in here, you can see how that matches up in this tremendous move to the upside. So what does that really tell us? Well, there's a couple of things that we need to look at before we get real bullish in the market. If we go from these lows here at around 1300 and match it to the next low that we can get to, which is this low, that will give us some idea of our upper level resistance line. Now, as we talked about on the other chart, we know that we have substantial resistance at 1200, 1200 being right about here. We're closing, it looks like we've got about an hour before the afternoon break sets in. We're trading at just above 1200, 1201.91, call it 1202. So we're right at a critical point in terms of whether we'll break above this or close below this. That will give us some information. MACD has really been oscillating back and forth. Our other oscillators really haven't given us the information that we need, other than the best mode or the best action right now is to be on the sidelines. We would get chewed up with any long or short within this market. We talked about an option strategy. Some traders have emailed me that they've put that strategy in play, and really what you're looking to do with that type of strategy is simply to write puts below here and write calls above this point. So out of the money, taking in premium. You don't take in a lot of premium, but at the same time, as long as it stays within this range, those options will expire worthless and you'll take in the premium. Really what I want to see is what kind of follow through we have. Now this basic move, we had the Dow Jones down, we had oil down today, gold up pretty substantially, and that's in regards to what's going on in Greece and the turmoil and discussions about putting them in alignment with paying the national debt that they have. And so we'll have to see how that plays out. Euro dollar was much stronger today against a whole basket of currencies, including the US dollar. And traders, you can absolutely see today's activity in terms of the dollar itself. Daily chart, this candle here representing a lower close. Currently trading under 97 at 96.91. What we want to look at are, we've got a series of lows that are just above 96. We talked about this on Friday, and this should be a level of support that's pretty important, whether or not we hold this level. If we don't, the next real strong level that you would have to look at doesn't really come in until about 94, and I mean strong. You've got intermediate areas that we can look at, specifically this top right in here, which comes in just under 96. It's probably somewhere around 95.80. And so those areas, this area here and this area here, would be the areas that we would watch. Potential support at, as I said, roughly 96, and then just below 96 based upon this particular set of highs right here on a technical basis, of course. And then last, I do want to take a look at silver, a 4% move to the upside. The one thing that we noted with silver that was unlike gold, where gold was trading sideways, silver absolutely wasn't. 1750, that's these highs here. And you can see this decline of a $2 decline in the per ounce in the price of silver as it just methodically moved lower almost on a daily basis. If you look at the candle color, you get alternating colors, but these alternating colors are coming in with lower lows. And so even when you get a green candle, but the green candle either has a lower low or it's a very, very small bodied candle, not making a higher high, which is what would be important here, we were definitely not within the range. But also, unlike gold, this one-day move has definitively propelled it above the 14-day very, very simple moving average, and it is closing strong at 1637. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.